It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Welcome back after a holiday weekend. I missed you guys. Hope you guys had a great weekend. Joseph James here. Tuesday evening. I know. One of those Tuesdays that feels like a Monday. Tuesday evening, October 13th, 2015. Boy, oh boy, do I have a newsletter in store for you guys and gals here this evening. Crude oil is range-bound this evening, one of three markets that's range-bound. You know I love those trading ranges, right? Trading ranges are such easy situations to trade. Well, crude is range-bound this evening, right smack at the lows of the range. We're watching for those sellers to fail, and we're going to be using the two-try rule on crude to qualify the breakout lower tomorrow. The S&P is very similar to crude oil, also range-bound this evening, also trading at the lows of the range. We're also going to be watching for the sellers to try and fail at these range lows on VE Mini, and we're going to use that two-try rule on the S&P as well. How about the gold? The yellow metal, we got a little bit of a different situation on gold. Gold is extremely bullish with a strength pattern, a spike in channel this evening, which tells us the buyers are extremely strong. And also the best opportunity is going to come after a measured correction off today's highs. So we're going to stay patient to be a buyer on gold, but they are flexing their muscles on the buy side right now on the yellow metal. And then, of course, the euro, the 6E, also completely balanced. We don't see a market this balanced very often. This euro looks like it's out of a video game here this evening. Euro is completely balanced and trading sideways and just smack right in the middle of its trading range, which means we're going to be looking for failure patterns tomorrow, just like on crude and the S&P. So we got three range-bound markets, and then we got gold, which apparently is, while no one's looking, just taking off to the upside right now. I got a plan for you guys tomorrow. Before we jump into our charts, though, and go over the plan, though, I do want to remind you to make sure you're watching this video on our trading blog here at schooloftrade.com. Our trading blog at sidewaysmarkets.com, I should say. Couple reasons why. First of all, upper left-hand corner, you can grab a free pass, come out and test drive our live trade room as a guest. If you're not a member here of School of Trade, grab a free pass, upper left-hand corner. Lower left-hand corner, you can register for our nightly newsletter mailing list. Now, you never have to worry about missing another newsletter ever again. All I need is your name, your email address, and then make sure you check your inbox. I'm going to send you a verification email on that one. And then right below the video tonight, you can download all the slides, all the charts for tonight's video. Have those on your computer for tomorrow. And then over on the right-hand side, you'll see a spot to learn more about trial membership. It's not the same as your free pass. Membership information, real member reviews, and you know we always have someone standing by 24/7, 365 to answer all your questions. Guys and gals, I hope you had a great weekend. Hope you had a great holiday, right? Boy, oh boy, a lot of great stuff on. Baseball's on right now. Weather's changing. Leaves are changing. Man, I'll tell you, this is one of those times of the year where it just feels great to be alive. You got football on TV, man. Couldn't have had a better weekend. Hope you guys did too. But we're back for some work here now. We got some money to make this week here as we continue through the last few months of the year of 2015. This is the best time of the year to be a trader, and we're going to start out right with crude this morning. Now, crude oil looked pretty bullish there for a moment today, didn't it? Yeah, it did if you didn't know what you were looking for. We identified this as being a range-bound market almost initially this morning, and as you can see, it pretty much finished the job. We initially found the trading range on crude right about here, and so we were looking to buy that low and then sell right back at the high here. Then, of course, you can see we've extended out or expanded out that trading range. This is a very simple situation, and you've probably heard me say this before. One day when I pass away to the trading room in the sky, I hope they bury me in a range-bound market, right? Somewhere where we have a balanced market. These are very, very easy to trade if you know what you're looking for. The key is when you see a flat market like this, you want to fade every breakout. So as we go lower, we're looking to fade it back into the high, right? Back inside. As we go higher, we're looking to fade it back inside, right? What you want to remember is to fade every breakout. How? With failures. So as we go lower, I'm looking for the sellers to try and fail. As we go higher, I'm looking for the buyers to try and fail. Now, if you don't know how to trade failures, I would love the opportunity to teach it to you. Just come out and join me tomorrow in the trade room. I'll teach it while I'm trading it. We'll wrap it up with open questions and answers, and we'll make sure that you learn every piece of this that you need to know. But for all my students out there right now, completely range bound. You can see the range. It's staring you right in the face. 48.09 to 46.84. Right? I've got some expansion targets below. Right? And then of course we'll use that range, cut it in half, add the 50% at 47.47, 48.71, and a range expansion above. Right? So I got my trading range, expand that down, expand that up. That gives me initially some fadeable areas, right? So if they jump down here, fade it back up. We jump up here, fade it back down, okay? Now, how do we know when a breakout becomes a breakout? We're going to use the 2-try rule for these trading ranges. So step number 1, find the range correctly. Step number 2, fade all the breakouts. That means price breaks down, sellers try and fail, we fade it by buying it back up, right? Targets above are going to be the 50 and then all the way back to the opposite side. Then we go back up, buyers try, buyers fail, we fade the highs, right? Selling off the highs. And where will my targets be? My targets will be in the same exact place, right? But now, of course, they're going to be back to the downside. You want to remember this range rotation, right? It's the same thing as a channel. We're going to rotate from the high, or let's say this example, from the low up to the high, back down to the low, up to the high, right? Back down to the low. Okay, now eventually one of these breakouts is going to keep going. Now, it's always wise, though, to be very suspicious of the breakouts. And what I'm going to be looking for is what we call the 2-try rule. We actually had a great example of that today in our trade room. So all of my students who are in the trade room with me today should know exactly what I'm referring to when I talk about the 2-try rule, right? So I want to see the sellers try twice and keep going. I want to see them try twice and keep below, I'm looking at you, 46.84. If we do go higher here, move this down bottom here. If we do go higher here now, up to the highs, I want to see these buyers try twice and stay above the 48.09, right? So fade the first breakout. The second attempt, as long as it stays above those highs, you're good to go, right? You're good to go. And then remember, if we do, let's say for example here, we do successfully break down. Right? I'm going to look for the sellers to fail. If they are successful, let's not lie, right? Let's not kid ourselves. They might be successful. If they are successful, then it becomes a trending market, and we're going to use this moving average as our biggest clue, right? Now, again, if you're a student of mine, you know exactly what I'm talking about. We talked about this all day today because we had a range on crude. If you don't know about the 2-try rule, you don't know how to use the moving average to tell you the strength of the trend, right? I don't use the moving average to get in. I use it as a big, important clue for the strength of that trend and gives me the overall area where I want to be looking for trading. So right now, big important thing right now is trading ranges. And you're going to see this on the Euro. You're going to see this on the S&P. So that's why I'm going into detail with it, because you're going to see quite a bit more of this tonight on this video. We have a trading range. Step number 1, find the range correctly. Step number 2, fade all breakouts. Step number 3, if we do keep going, know where we're going, right? Know what our levels are. 46.84, right? Got to stay above 48.09, stay below 46.84. And then we're going to use this little moving average to give us kind of that thermometer in the mouth of whether or not this trend is worthy of us following it, right? We saw a great example on crude today. The bottom line, though, is right now we're in a range. Until proven otherwise, we're going to be fading this low, right? Buying this low, seller failure, buying back up to the top, buyer failure, sell it back down, and so on, rinse and repeat until we get the qualified breakout using that 2-try rule. And even then, we're going to watch that moving average to make sure we know what side are we going to be on to make sure we stay with the strong trend. Range-bound markets, they're easy money if you know how to trade them. And then again, Here is literally, if I covered this up, you may not even know, right? If I covered up the prices on here, you might not even know the difference in these two charts, right? They look very, very similar. The only real difference is that there was a little bit more information on this S&P chart. This is the S&P, by the way, right, for a possible measured move. That's really all we got extra on this chart. You can see the volume, right? Volume's definitely weighted. Wait till you see the euro. The euro is, you don't see them like that very often. You're going to love the euro here in just a few moments. But looking at this S&P right now, same thing, right? Same thing. You can see we're going to rotate. Rotate from the low up to the high, rotate from the high down to the low. And as you can see here, these sellers have tried once, right? Second try, are we going to stay? If we can't, we're going to be buying here right back into that range. And if you're wondering, what am I leaning more towards? Well, I'm always, when I see a flat market like this, what you're seeing right now, I'm always erring on the side of fake out breakout, right? You always have to. Make them prove it to you. Make them prove it to you. Again, I can't emphasize this enough. We saw it in real time today on crude oil in the trade room. It was a great example of it, of what I mean by make them prove it. So as of right now, I see these sellers are definitely trying. If we slip back above that 98.5, we're going to start seeing sellers get stopped out, and the stop losses are going to throw that price right back into this range here again, and buyers will most likely attack it. So we got sellers are trying here. If they can't keep below this range, though, target right back in the middle, 50% target, 100% target, and then back up to the highs again, two-try rule, back to the lows, two-try rule, back to the highs, so on and so forth. Nothing special about this market right now. It's a complete range. But the one thing this market, it's a little bit different than the crude, is that this one is in the middle of its second try. The crude is not. Crude's in its first try. I look forward to go over more details with you guys and gals in our training classes tomorrow about the two-try rule. Now that we have our second try here in the mix on the S&P, we have a definite line in the sand at 98.5. Back above 98.5, we're bullish. Below 98.5, we're bearish. And remember, we're going to be using that little moving average as our thermometer, right, as our kind of finger on the pulse of how strong this trend is going into tomorrow's session. Again, if these sellers fail, I've got targets back up overhead. If these sellers are strong enough, we're going to see a measured move, most likely a measured correction, and then that's where you're going to see them hold to finish that move off. So again, your line in the sand, 98.5 tomorrow. I wouldn't be surprised, though, if we see that measured move go down, right? Finish the job off. We're definitely bearish at that point. Stay patient for a measured correction. As long as they can keep it after that measured correction below that 98.5, should be a bearish market tomorrow. We're going to see what happens tomorrow, obviously, in real time in our trade room. Opens up tomorrow morning at 8 a.m. Eastern Time. Let's keep going. Now, it's about time we saw a market with some cojones on it. Right here, we got a bullish market now. Finally, something here. I was getting worried there for a bit. I was like, am I going to have to talk about range-bound markets the whole time on this video? No. Thank you, gold. Now we have, going from a balanced market, this is now the complete opposite. This is you can just see the buyers just flexing right now. Strength. By the way, there's no F in strength, okay? Right? We get that? So gold is bullish with a spike in channel this evening, which tells us the buyers are very strong. And we also know the best opportunity will come after a measured correction off today's highs. So we will be staying patient tomorrow. The spike in channel screams strength from the buyers. But the reality is we've already missed the best buying opportunity. We can't buy these highs right now. I mean, you can buy these highs, but don't make a habit of it, right? You don't want to pay premium prices. Buying this price right now is, well, it's like buying a home in 2008, right? You're going to lose all that value the next year. So we don't want to buy the highs. We want to buy at a discounted price. We want to buy on a pullback, right? Remember, we know how these spiking channels work. Here's how a bullish spiking channel works. Buyers take off with the spike, right? There's your spike. then we go into the channel. Now this channel is what I call a lazy channel, right? Kind of like the lazy river, you know, at the old amusement park, right? It's a lazy channel. The reason why it's a lazy channel, and really the term lazy channel is really emphasized because the spike up is so strong. That's where the strength comes. So buyers spike it up, and then you've got rookies and retail traders chasing after it. But remember, the reason why it's a lazy channel is because all of the professional buyers, all the big money buyers, they're already in. That's what caused the spike. So what happens is you get all these little tiny pullbacks, and they're very misleading. Again, they feel lazy. When you see how fast and how strong the spike is, the channel makes you feel like something's wrong. And that's exactly why this pattern is so challenging for a new trader, because then you have the correction. The correction that comes can go as far as the beginning of that channel. And what always happens is that now people think we're bearish. Right? That correction is actually coming from the same buyers that bought to make the market spike. They're taking their profit. And of course, at the same time, the lazy channel is causing people to think that this market is now ready to fail. Then we see the correction, and it usually catches most new traders off guard. It makes them think big pops equal big drops, right? If you saw that happening, you didn't know what this was, you would think, oh yes, we're going all the way back where we came from. And we might. But historically speaking, though, the best way to trade it now is to look for those buyers now to come in, seller failure, and buy it right back up. And then what happens is this becomes an A, B, C, yeah, I finished school, and D, right? There you go. That's the classic spike and channel. It's a strength pattern. But remember, what makes it so tricky is the combination of the lazy channel, right, which has traders thinking, boy, this thing's really slow right now. Maybe it's going to reverse. I think I've seen a reversal before. Let's try to sell it, right? The sellers come in during the correction. Remember, the correction is only happening because all the bulls that bought this thing up, they're going to have to take their profit. When I think of a spike and channel, I think of a poker table with all the chips all in the middle. Everyone's in. How are they going to keep buying this if they get all their chips in the middle? Exactly. They've got to take their chips out of the pot. They've got to cash in their chips. That's what causes the price to correct. It's usually a very quick correction to the point where it confuses us. It makes us think, wait a second, this doesn't feel very bullish. And that's exactly where professionals want you. Because now what happens is you see the sellers come in, they try selling, and once they get stopped out, we see professional buyers jump all over it, and it sends this price right back through the roof. It's a classic rope-a-dope, a classic okey-doke. It's a classic rookie stop run, and it's one of my favorite patterns. It's called the spike and channel. Now that you guys are experts on this, now look at the chart again. Can you see it? You can see the spike and channel. It's easy to see. Spike up, channel out, and really the way that I teach the spike and channel is spike and channels are easy to find because nothing else fits. You're not going to draw a trend line up like this, right? You're not going to draw it like that. It doesn't fit. The only way to really make it look correct is to draw the channel like this. Okay? I teach this all day, every day here at School of Trade. You know, like I always remind you guys, don't do this alone, right? Get some experience. I've got almost 15 years experience of watching these charts. I can help shorten the learning curve significantly for you, right? If not, you got to learn by trial and error, and it's really expensive to do it that way. Trust me. I lost over 6 figures learning by trial and error, right? Because you're not going to find the stuff you want on YouTube, right? Come in and join me in the trade room. I'll teach it all to you the right way. So gold is bullish, spike and channel. We know we see the spike and channel. The buyers who got in earlier today, they're going to have to take their profit. And when they take their profit, it's going to correct. When it corrects, it'll usually go back to the beginning of the channel. That's about as far as it will usually go. That's where you want to start watching for the sellers to fail to buy it. We don't know where they're going to pull back yet, too. But we do know that, typically speaking, it's the beginning of the channel, right? It's the beginning of that channel, right? We'll look for a measured correction into seller failure and the buy. The one thing, though, that you need to remember is that this is a bullish strength pattern. It will not be until we literally see the sellers able to get price below this range and then hold below it that we truly do know that this thing has failed. Okay, it's a very strong bullish pattern. It screams strength. Don't mess with the bulls on this one. Don't mess with the bulls on this one. All right, guys, and stay patient. Patience is really the word. Unless you saw these sellers failing earlier this morning and you had the wherewithal to buy that first pullback, unless you're in already on this, you really got to be careful right now. I would expect to see this channel rotation, right? We do expect to see the rotation completed here. But again, I'm here to tell you where the highest probability, the most reliable trades are going to be. And that's going to be after a measured correction here right now on the gold. Gold is a market that is screaming strength right now. It is a polar opposite of this market. I mean, literally, I can't even think of the last time I saw a market like the euro. Look at this market right now. Is there a news event I'm missing this week or something like that? What's going on? Because this market looks like it is walking on eggshells right now. Look at the volume. Look at this euro right now. Is this a joke? It's not Friday the 13th, right? It's not April Fool's yet, is it? What is going on here? This is the right contract month. Everything's correct. Look at this volume. Duh, right? It's like, I don't know what else to say. It's completely balanced. We just don't see this very often, right? This is very rare. Usually you're going to see some volume piled up at the highs, the lows, you get the most volume in the middle. This thing is just like, bam, what else you got for me? It's pretty, apparently, the buyers and sellers are pretty damn comfortable at 1390. Apparently, it's a warm and cuddly little area here for these buyers and sellers. Jeez Louise. Okay, so nothing really different about this range. It's a range-bound market. Now, guys, I drew these trend lines on here, but I got to tell you, you can really get rid of them. I mean, they're not really necessary. They really aren't. This is kind of a bad habit of mine. Just, it makes you feel better, doesn't it? Yeah, see, it makes me feel a whole lot. Just makes me feel better knowing I got some trend lines on there, right? Those things are worthless. Get rid of them. Trend lines, channels, it doesn't matter. They're all very low reliability. We saw a great example of that today on crude oil where we thought we had a big bear and we didn't think we had a channel at all. We knew we had a range. We traded it correctly today. So, I'm sure there are folks out there who want to call this a wedge. It's just a range, right? A wedge, a triangle, a pennant. It doesn't matter. It's a trading range, guys. So what's the plan? Fade the breakout. Seller failure, buy those lows. Go up to the highs, buyer failure, sell those highs. True try rule, right? Targets back to the opposite side. Range rotation. This market needs a cattle prod right now. Somebody bring those paddles into the room and just get this thing going. Get this thing going. Right now, the name of the game on the euro is patience. Let this price go down to those lows. Let those sellers dig it into those lows and then wait for them to fail and then right back up. If we can buy those lows, your targets are the 50, right? And then back to the opposite side. If we go to the highs, sell those highs. Where's your target going to be? 50, yep, and back down in. Now, if we do happen to get some craziness here in the pre-market headed tomorrow, we do have some measured moves. These will make for some excellent fading opportunities. Right? Measured moves. I'm reaching right now, though, guys. I'm trying to find something to talk about on this chart right now. Really, all you got to care about, though, is the trading range. Fade those breakouts. Be suspicious of all the breakouts. Crude and the S&P are setting up beautifully for tomorrow. This euro is probably going to make you wait. Hopefully it doesn't, but now you know the plan. The hardest part about this euro is going to be patience. And the gold. The euro and gold are all about patience tomorrow. Gold, you got to wait for that pullback. Euro, You got to wait for the breakout, either up or down. Doesn't matter to me. Just do something, right? On this gold, wait for the correction. On the S&P, remember the line in the sand? 98.5. Make these sellers prove it. Wait for the measured move. Wait for the correction. And then after they hold that correction, then you're going to know you're bearish on the S&P tomorrow. And then, of course, got to love it. Got to love the crude oil right now. Looking for sellers to try again and fail to buy that thing right back up. Guys, that'll do it for us tonight. You've got the plan for tomorrow. Now, one last thing here for all you crude traders. Tomorrow, because of Mr. Christopher Columbus, right, which I'm still wondering, how did that guy get a holiday? I mean, I won't even go into it, but I mean, is it just me, or they were stretching a little bit a couple hundred years ago when they were thinking about this holiday, right? I mean, Columbus? Really? I'm having fun with you guys. If you know the story behind Chris Columbus, right, it's taught in our schools here in the U.S., but over the past couple decades, though, we've quickly found out that that may have been sensationalized a little bit. I don't know. I'll let you be the judge. Do your own research. The bottom line, though, there was a holiday on Monday, which means they have pushed this. I like to have some fun with you guys. Now you're not going to get that inventory report until Thursday, okay? So typical situation. Monday was a holiday. No inventories tomorrow. No API number tonight. Tomorrow's a full day of trading. You've got lots of Red Star News and Beige Book in the afternoon. And then you better carb up for Thursday. You better drink your electrolytes for Thursday, because Thursday is going to be a crazy one, right? Let's see if we can cram a little bit more economic news in that Thursday session. I can't wait. And then, of course, they're going to give us Friday jolts. Janet Yellen is just loving this week of economic news right now. Guys and gals, careful. Again, tomorrow, no inventories tomorrow. The day you want to be thinking of inventories is going to be on Thursday. And then don't forget, all kidding aside, we had some fun today on this newsletter. Don't forget, I take a lot of pride in the fact that you're going to learn more on my free trial than you will anywhere else on the interwebs. I'm going to put my money where my mouth is. Grab the free trial right on our website. Just make sure you check your inbox. I'm going to send you a verification email. And then while you're here, learn more about our 3 levels of membership. And guys, we always have someone standing by 24/7 to answer all your questions. Guys, we have been doing this longer than anyone else on the planet. We'll be celebrating our 12-year anniversary here at School of Trade in 2016. I am so excited to welcome you guys aboard as brand new members of our community. Keep in touch. Give me some feedback below the video. Send me an email. I'm JJ at School of Trade. I'd love to know how you guys like the newsletter. I'd love to know how I can make it a better resource for you every day. And don't forget to share it with a friend. My name is Joseph. Tomorrow morning, 8 a.m. in our trade room. Okay, tomorrow evening, 8 p.m. for our newsletter. And that will do it for me, boys and girls. Be well out there. Be nice to each other. And would somebody pray for the Dodgers, please? Somebody please pray for the Dodgers. The Cubs look so much they look so much stronger than the Dodgers do right now. Kershaw, I need you to help me out right now. I need you to pull it together and take these Dodgers to the World Series. All right, hey, if I can't root for my Red Sox, I'm either a Cubs fan or a Dodgers fan. Who you got? Leave me a message. You got to love this time of the year. You got to love this time of the year. My name is Joseph. Be well out there. Be nice to each other. I'll see you on the flip side. Adios, amigos. Bye-bye for now.